Part of decision. We've certainly had feedback from shareholders that they would like more regular payments, and secondly, they would like larger payments. So, given the cash flow, given the performance, record earnings, record cash flow, I think it was the right decision. Whether we've got the quantum right, we always look at cash flow and whether that's the right thing, and we balance it against our funding needs. We think we've got the balance right, but we're looking to do more in the future.
Yeah. So with that dividend cover at 10%, as you told me now, is that likely to improve going forward? I'm sure that's a question many shareholders would like to hear a very good answer.
Well, certainly from our point of view, yes, we'd like it to improve. I've always worked on a philosophy of trying to achieve something like a 30% cover, but I think we've got to be careful in the next 3 years. Big growth program, we've got to fund that, got to make sure that we keep ourselves investment grade. So we'll balance all those issues, look at our cash flow and try and do the best thing we can, but hopefully we'll keep growing that.
Yeah, record results are always difficult to better, isn't it? I mean, you've got the rand where it is, you've got the gold price where it is, you've got costs, yeah, reasonably under control, but perhaps bubbling under a little bit. From here on, what will drive earnings going forward?
Well, I think there's no doubt. I still think that the gold price has some risk to the upside. I think if you look at the cost of producing gold, north of $1,200, gold price $1,600, $1,700 on fundamentals, and now we've got Europe going even worse if that's possible. I think the risk to the upside in the short term, and if that occurs because of our leverage, I think we could do better on earnings and cash flow and hopefully reflect that through to dividends as well. So I still see some legs on the gold price. I think for us, the second key factor is growth. In the next 3 years, 24% growth. All things being equal, we should grow our earnings by that amount. We're not going to do it with equity, we'll do it from cash flow. So for shareholders, go straight to the bottom line.
The gold price going forward, can I pin you to a number? You had $2,200 for 2012. Does that remain?
I believe that the gold price will touch $2,200 or could easily touch $2,200 next year. I'm not sure it'll average that for the full year, yeah. But I certainly believe it could average up near somewhere between $1,800 to $2,000, and we could even see $2,200 next year. I expect to see that much volatility given the economic issues that the world's confronting at this very point in time.
Let's talk about that growth. Where is it going to come from? You've spoken about the need to deepen the mines here in South Africa. Outside of South Africa, what are you looking at and where?
Well, firstly, key challenge for us in South Africa is to hold our production level despite going deeper, and we've got some good projects to do that. We expect to see growth in continental Africa, 20 to 30% growth with Sadiola project, developments in the DRC, both Mongolui, Kibali. We're building a new operation in Sunrise Dam, so we'll double production out of Australia. We're building new projects and extensions in the US, Brazil and Argentina. So the growth is pretty broadly spread across the portfolio.
That will cost a lot of money. How much are we looking at here?
We would spend about $2.5 to $3 billion over 3 years in building those new projects. So we're still on track with that. We're talking about around $2 billion from now on. So we've already spent about $700 million of that expenditure. So we're looking at about another $2 billion over the next 2.5 years.
Yeah, and in terms of production, to try and match the higher gold price that we're seeing, what sort of production target are we looking at for 2012 at least?
For 2012, what we've said is we expect it still to be relatively flat. We haven't given a detailed forecast yet, but we expect it to be flat year on year, given the challenges we've had, droughts, floods, those sorts of issues. But the real kick starts to come in 2013 with the new projects starting to make a contribution. So Australia, Brazil, the DRC all start to make a contribution in 2013.
And that target for 2015, I think I remember if you go 5.5 million ounces, did that stand?
For us, it's about a 24% increase. Still challenging and aggressive in terms of the industry, but we're holding that forecast and the projects are looking good at the moment.
I was actually going to ask if there was a risk of an upside higher than that number.
Yeah, I'd like to think there was a risk higher, but it's still very challenging. It's a challenging target, and we also have to manage grades that are depleting in certain areas. So we think it's an aggressive target, but it's achievable.
So given the fact that we've got a gold price that's near record levels, and at the same time we're also talking potentially, you saying potentially you see that gold price going higher, would it make sense to hedge now?
We are very competitive in our cost structures across the industry. Yeah. When you're in a position where you believe the industry on fundamentals still has a way to go in terms of price, I think our shareholders would be very unhappy with us if we were to hedge. And the thing is, We're a global operation or a global business. We're very competitive. We should stand on our own 2 feet and make sure that we make money on fundamentals, and we believe that's the right thing.
But would it not be a prudent move to hedge, particularly given that these prices, I mean, there's no guarantee that prices will remain where they are?
Yeah, but our shareholders have bought in us because they believe in us and they believe in the gold price. So if they want to buy a hedge instrument, then maybe they should invest in a company that isn't as robust and strong as Anglogold Ashanti.